Hi folks, welcome to this video on Treasury shares. In this question, we're going to review the repurchase of shares to be held in Treasury and their subsequent reissuance. We've already done something similar to this. However, in this question, which is different from others that we've had, is that we open the equity section with this company having shares that are already being held in Treasury. So now, in this question, in addition to the Treasury shares that are already in the equity section for the company, we are going to buy back and hold additional shares in Treasury. So what we're going to need to do is to calculate the average issue price at which the shares were repurchased by us as the company and held in Treasury. So if we follow the requirements, they've given us 3 transactions. In the first transaction, the question says that we're buying back some shares, common shares, and we're holding them in Treasury. So now we're going to debit our Treasury stock or Treasury shares, and we should always say they're on common, eh? Now sometimes you'll find out that in these solutions they don't, but in any case we know that we need to specify that it's on common. And again, as we've said before, you could have different classes of common, so we'd have to specify that, but we don't have that issue in this question. We do know that we bought back 100,000 common shares and held them in Treasury. So remember, the Treasury stock account is increasing when we debit it. It's a contra equity account. And then we're going to credit our cash, all right, for what we paid to buy back the shares and hold them in Treasury, which is $8 a share. How do we know that? Because we got $800,000 for the shares when we bought them back. So now, the next thing we're going to do in transaction 2 is now we've reissued 40,000 Treasury shares. But before we do that journal entry, remember, because we're now going to be reissuing the Treasury shares, we have to remove the Treasury shares from our books based on the average price that we paid to buy them back at. So what does that mean? We know that initially we had 50,000 shares sitting in Treasury at $250,000. We got that from the equity section, and we just bought back in transaction 1 100,000 shares to sit in Treasury, and we paid $800,000. So on average, we have 150,000 shares that we paid $1,050,000 to buy back. So on average, it cost us $7 per share to buy them back. So we are going to issue those Treasury shares out of our Treasury share account, so credit Treasury shares in our transaction based on that average price that we paid to buy them back at times the number of shares we're reissuing. And that will give us, it's a little bit skewed here, 280,000. But notice, the investors have given us $9 a share to buy back shares that we bought back on average at $7. So because it cost us less on average to buy back those shares at $7 and hold them in Treasury than the investors were prepared to give us now, because the common are obviously trading at 9, we're going to be creating contributed capital on the Treasury stock or Treasury shares transaction, and that's 80,000, right? So we've explained that down here, that we created contributed capital on the Treasury share transaction because the investors gave us $9 to buy them back, but we've been buying them back and holding them in Treasury at an average price of $7. In transaction 3, a similar thing happens, but now in this transaction, the investors have only given us $4 a share. Clearly the market price of the common has dropped, and we're going to be reissuing those 50,000 shares out of Treasury at our average reacquisition price, which was $7 a share. So we're going to credit our Treasury shares, okay, for uncommon, if I can spell that right, uncommon, for 350,000. And that's correct because when we credit Treasury shares, that means we're reissuing them. All right. And when we reissued them, we took back $4 a share for them because that's what the investors gave us on 50,000 shares. So that's 200,000. So you can see the entry doesn't shore up. We've got a debit of 200,000, a credit to Treasury shares of 350, and that makes sense that we have to debit something because we got less from the investors than it cost us to pay them back. So it's not a loss. We have to debit some equity accounts. The first account we go to is our contributed capital on treasury stock or treasury shares. And we can see here that we created 80,000 to which, and we'll add that to the opening balance that we had at the end of X8. Notice in the question we already had contributed capital on the treasury stock transaction sitting at 10,000. So when we added 80,000 to it, we now have 90. So we can draw down on that 90, but we still don't have enough on the debit side here to shore up with the credit, so the balance goes to retained earnings. So notice that again we reissued the treasury shares at what it cost us to buy them back on average. So we took them out of our account at what it cost us on average to buy them back and hold them in treasury, and we debited cash for the amount the investors gave us. All right. Now, the question also asks us in the second requirement to come up with the balances in the equity accounts. Notice in this particular question, they didn't ask us to do a proper shareholders equity section, so we can just outline the values that we get here. The first account we've got here is the preferred shares, and notice nothing happened with them, so we still have 50,000 shares issued and outstanding for 1.25 million. No change there. In the common shares, however, we have a change. Notice we had 1.5 million shares issued, right? But we now have, of those 1.5 million that are issued, we know that we only have 1.44 million shares that are outstanding. Why? Because we know we've got 60,000 in treasury. How do we know that? If you go back to the question, you remember that we already had 50,000 shares sitting in treasury, right? At the beginning, that was at the end of X8. So I'll put this in here. End of X8, we had 50,000 shares in treasury. But we had 150,000 shares in treasury after the repurchase of 100,000 shares. So after we did transaction 1 here, after that, you can see we now had 150,000 in treasury. But don't forget, of those 150,000 shares, we reissued 40,000 and 50,000, right? So that's 90,000 that we've reissued, right? So we reissued or took out of treasury 40,000 and 50,000. So 150 less 90 is going to give us 60,000 shares held in treasury. So if we know we have 60,000 of the 1.5 million in treasury, then that must mean that sitting with legitimate shareholders, we've got 1.44 million. Now the common shares, again, don't forget the balance doesn't change. We still have 3 million there because we treat the treasury shares as a subset of the common shares. So we still have 3 million out there. Notice that we've also used up our contributed capital on the treasury stock. We started with 10,000. And you'll recall that we used up 80,000 of it, or created 80,000 of it in transaction 2, I believe it was, yeah. And then we had to use it all up in transaction 3. So we have none left. Retained earnings now, we had 2.6 million to end X8. That's in our question. And don't forget, we had to use up 60,000 in transaction 3 to shore up our entry when we reissued 50,000 of the treasury shares. So we now have 2.54 million in retained earnings. Don't forget to include the treasury share account. It has 60,000 common shares, and we can very easily figure out what the balance of those treasury shares are in dollars, because we know they're sitting in treasury at an average price of $7 a share. So that'll give us $420,000. So this concludes our presentation on treasury shares. I hope you found the video useful.